my mind. Looks like we're in the click.
What is going on, you guys, and welcome back into episode 2 of the newest series on our channel, where we are going to be starting and building up portfolios from scratch and letting you guys ride along shotgun the entire way. Dad, what's going on?
Hey, Brian, I'm doing well up here. How are you doing?
Pretty good. I'm so excited for this series, and just prior to filming this video, we've added 8 stocks to our brand new portfolios. Let's fill the viewers in on what we ultimately decided here with our challenge, because we did have a lot of push and pull and a lot of feedback, didn't we?
We had a ton of feedback from you, the viewer, and we had everybody looking for small accounts, everybody looking for big accounts. We settled on 2 different accounts, basically splitting it down the middle.
I think that was the most fair. There were so many people wanting Questrade, so many people wanting Wealthsimple trade, and like you said, all different dollar amounts. What we landed on was starting 2 portfolios, $20,000 a piece, Canadian dollars, and we are going to be adding an additional $1,000 in contributions every single month to both of these accounts. And that way we can build them up. We're going to get into actually the breakdown and our strategies with each of these accounts in just a moment. But that way we can kind of have 2 portfolios hand in hand. We'll still be monitoring them from a top-down level together, but it'll give us a little bit of flexibility. And that way I think everybody's happy. You do get... I know we have a lot of native Wealthsimple trade users if you're just getting started. I know we have a lot of Questrade users, which is what I use. And by the way, if you guys do want to sign up with either of these platforms, as part of this series, we are a partner with both of these platforms or brokerages here in Canada. There are some referral links down below where you can get some sign-up bonuses. They also give us a bonus if you do sign up. And we do even have our private membership group for those that want to follow along live with the trades. But I think that's really the housekeeping, Dad. I think we dive right on into this plan and series, and
sure,
I'm so excited.
From a top-down level, like you say, we've got the 2 different portfolios, and we are going to manage them a little bit differently, almost like different models. So I think we settled on the Questrade portfolio is going to be more of a growth-oriented portfolio, so probably more suitable for younger investors or older investors with a little bit higher risk tolerance. But the focus on that will be on equity investments with probably a touch of fixed income just to build the portfolio. On the Wealthsimple side of it, that will be more of a traditional sort of balanced portfolio with a higher position of bonds or cash, that type of thing. More blue chip on the equity side. And hopefully this will give you a good idea of how the 2 different portfolios will work at various times through the market cycle. That's kind of the plan anyway.
That is the plan. And I'll speak for a moment on that just to educate on these platforms. By the way, timestamps are down below if you guys want. But the decision process behind that, Dad, was that when you do understand both of these platforms, Wealthsimple Trade is currently, and things do change all the time, but they currently are a more favorable platform for Canadian holdings. And that's why, like you mentioned, we're going to be going for a balanced approach, very focused on dividends, in particular Canadian dividend stocks, I imagine. Some US too, of course. But if you want the true commission-free trading, the Canadian stocks is where it's at with Wealthsimple Trade. There's no conversion fees. Of course, there's no commissions. And you can really easily build up a portfolio there versus as we were planning out what we want to hold and as we were planning out the Questrade portfolio, unfortunately, with Wealthsimple, there are a list of stocks that you just simply can't own. And that could be simply the case that this is a newer platform. It's just getting off the ground. It is really new at the big scheme of things. And there are a ton of holdings that you may want to buy, and just unfortunately, Wealthsimple doesn't offer them. So it did make sense. That's kind of the reasoning behind why we are splitting up these 2 portfolios in that way. Also, Questrade does tend to be a little more favorable with the US stocks because you can hold US dollars on that account. We've gone into that a million times. I've done a million reviews on both platforms if you do want to dig them up on the channel.
But I think just very quickly, Brandon, if you are a Questrade user, it will give you a glimpse, I guess, into what Wealthsimple offers and vice versa as well. So, there isn't a one-shot deal that works for everybody necessarily. So a lot of people I know use both platforms. This might give you a little bit of exposure to that as well.
Great point there. Yeah, just to kind of get the exposure. I don't want to take this on too long, and we're going to dive on into our additions in just a moment, but there is a couple of considerations I want to talk about, Dad. This challenge that we are starting is going to be such a good teaching opportunity and such a good educational component, because if you didn't notice, we are currently at all-time highs. And the question I get in the comment section every single day is, well, I can't start investing now. Markets are at all-time highs.
Yeah,
we're doing it. We're starting our portfolio with all-time highs. Obviously, we do have a bit of a strategy in terms of phasing money in and maybe you can speak a moment on that about how much we're starting with, but I'll let you take over.
Well, sure. Well, this is reality. And, whether you've decided you can start investing now, whether you've come into some money, whether it's a small amount, a bigger amount, it doesn't really matter. If you're going to be an investor, you're going to face market highs, you're going to face market lows. So this is what it's really like if you're investing. So even though it's more challenging right now to find investments that are undervalued or as undervalued as you like, it sure beats sitting on the sideline for till the market's correct, because they can go up for a long time before they pull back. So what we've attempted to do here is look for companies. Initially, we're building up the position. So we're not going to take 20,000 each portfolio and invest it all today. That's not realistic how you would do it. You're going to build up the position over a period of time. To some degree, the market dictates that. But we know that majority of time periods, the markets move in a positive direction. So to sit back way too long is just not going to, that just doesn't cut it as a successful investor. So our initial positions today are going to be a percentage of the portfolio. We're going to be, working this in the coming weeks. And then with the extra $1,000 a month going into each side, that will give us more opportunities to build there as well.
Correct. Well, I mean, why don't we just dive in? I think basically displaying what we purchased may do a good job of showcasing that.
Sure.
But why don't we dive into that? I'll take it away with maybe our Wealthsimple portfolio to start.
Sure. Yeah.
Well, let's start with that, and I'll pop some up on the screen with you guys. I may even show, I recorded some of the live purchases. Super easy and intuitive platform to use. Really quite simple. And with our $20,000, we opted for 4 Canadian holdings, and this will start to form the base and core of our portfolio. The 4 stocks that we went for were the companies Manulife, ticker MFC. With Manulife, we opted for 40 shares, a total value of about $1,000 Canadian. We hit the stock at an average price of about $26.16. We wanted to get some financial exposure to start off, Dad, and we briefly looked at some of the banks. And although we very heavily considered it and probably still would consider adding the banks at this point, we just felt Manulife may have been a slightly better option in this space. You are getting a higher yield than actually a couple of other banks we looked at. And it just is trading at, in our opinion, a little bit of a better value at the moment.
Right.
A second stock we added was Bell Canada. Ticker is BCE.TO. And with Bell Canada, again, we opted for that $1,000 price tag. This bought us about 17 shares at an average price of $59.30. With Bell Canada, we did a quick screen of some of the telecoms. And amongst the competition, it's fairly equal playing field right now. They're all trading at a slight discount. What we did notice, however, is that Bell does currently have the nicest dividend yield, sitting at 5.7%. As well, the PE ratio in comparison here to TELUS and Rogers is looking the most attractive. And that's not to say that down the road we aren't going to own additional telecoms. In fact, I'm quite certain we will own at least 2 to complement each other. But to start off, we thought Bell would be a great choice. You're getting the great high dividend yield, which is something we are prioritizing in this account. Next up, we did buy the stock CNR. Such an exciting one. We've covered the stock so many times. And hey, tremendous news, I guess, if you are looking long-term with this company. Just earlier today, I believe it was, we had news break that Kansas City Southern did accept their bid. So they ditched the CP bid, which they were considering quite heavily, and they opted with more money, which is, I did a video on them recently if you did want to check that out. This is a stock that I've said I wanted to own forever, Dad, and now's finally my chance.
Now we do.
Now we do. We get to own in the portfolio. As for the amount with this company, let me just pull it up. With CNR, again, we went with that $1,000 mark. This bought us about 8 shares at an average price of $130. Smaller dividend for sure, but I think in comparison, completely fine. This is going to be a great long-term hold. Lastly, for the Wealthsimple portfolio, we opted with the company Enbridge. And just taking a look at those 4 companies alone, we are getting diversity amongst a number of different sectors and industries. Still a lot to go, but it's a start. With Enbridge, we bought $940 worth. That was 20 shares. Personally, I'm not the hugest fan of energy myself, Dad, just because of the volatility, and it's just not one of my favorite sectors out there. That said, I think it does deserve a spot in the portfolio, and we bought these shares at an average price of $47. So as of right now, that sits us at about $4,000 invested in 4 Canadian stocks, no commissions paid, of course, but we're still sitting on a boatload of cash. In this case, 15 to 16,000 that we will be phasing in over the coming months. Why don't you take it away with? Oh yeah, we got some action going in. We got groceries coming in, but why don't you take it away with your what happened on Questrade?
Sounds good. And on Questrade, as we mentioned, this is going to be the more growth-oriented company, but in all cases, just good, prudent investing. We're going to invest in companies that we're willing to hold for the long term, for years and years. And so the 4 companies I bought this morning are, let's start with Apple. And Apple is, as you know, everybody is familiar with Apple. It's pulled back about 5% in the last month or so. And even if that hadn't occurred, you know, you look at the ecosystem that they have built and the prospects going forward, and just the depth of the company, it just made sense to hold that again as one of our key holdings. It does have a relatively small dividend yield. What we did on that one, we bought, let me just have a look at the screen here. We ended up buying 12 shares, an average price of 127.13. So in US dollars, it's about $1,500 for that. The next company that we're adding to the to this portfolio is Disney, and Disney's been through quite a ride recently. We ended up buying 9 shares of Disney at 174.16 US, total of about $1,500. That, of course, will be converted into Canadian dollars. Disney has pulled back about 12% recently. They've had a really nice recovery in the last year coming out of the COVID scare, maybe overshot the runway a little bit. They're pulling back. But, you know, I like the continued prospects as we move further and further away from COVID, although we're still in it, but as we move further to the end of it. And, of course, they cut their dividend. They suspended their dividends. So, you know, I suspect that at one point that will come back online again. That should help the prospects of the company. And, you know, they have this wonderful franchise and all the characters. And so there's a lot of runway ahead for Disney. The third company we added in this portfolio is Lockheed Martin. So Lockheed Martin is a huge player in the defense industry. And, you know, there's a lot of uncertainty out there right now, and the defense industry is not going anywhere. A reasonable yield, 2.7% right now. We bought 4 shares of Lockheed Martin at an average price of $391.05, about $1,560 US. That will be converted to Canadian. The fourth company that we added into this portfolio is Google, or Alphabet. We bought 1 share. This is a more high of a price company right now. The shares are trading at 2,300 roughly US. So we bought 1 share, which is a little bit more than we wanted to spend from a diversification perspective. However, it's a company that, you know, it's a core of this portfolio, and, you know, should provide returns for years and years to come. From a valuation perspective, it is trading in line with its historic averages. For example, from a price to earnings ratio, it certainly isn't cheap. This is one of the challenges we need to invest money. The markets have done very well. So this is kind of a compromise in adding a good, solid company. And if we happen to have bad timing and it takes a hit from here, we're still comfortable owning that. Who knows? We might add into it at a certain point. It's a staple in the industry. Does not pay a dividend. That's one of the negatives against the company. But, you know, as we're rounding out the portfolio, I feel that this would be a good company to add as one of the 8 that we've got so far today.
I agree. And in fact, I'm quite pleased with all of the stocks we selected. I'll put up on the screen just a little thing on the bottom there that shows all of them. And you got a bit of US, you got a bit of Canadian. I think a great teaching point in this video is that, you know, even a couple of these stocks, like you mentioned, Google and Apple, they're not that far off all-time highs. And right. Yeah, you know, you don't have that quote unquote deep discount sale. But when you have these high quality companies, I mean, I've owned Google in my personal portfolio going back in a couple years. At the time I was buying at all-time highs, and these stocks keep pushing further because of just how powerful and strong they are. And that goes for a company like Amazon as well. It's, you know, when you do look at those charts, they can be scary to buy at highs, but then you take a moment to look actually deeper at how much money these companies are making. It does show a very promising future for these companies, and that's one of the key reasons why we want to incorporate them as part of the core for our portfolio.
Well, and really key, you're buying quality companies at all-time highs. And if you look back through these charts over the years, they're constantly hitting all-time highs. Then they pull back, then they hit another. So an all-time high doesn't mean you got to run for the hills. It's like buying a good quality piece of real estate. Even if you pay a high price, If it's in the right spot, good quality, it's going to continue to go up when you look back over the years. And that's what we're doing. We're building the core of a long-term portfolio.
Well, hey, maybe I think, Dad, that'll wrap it up. We're not going to try to keep these too long, at least when we're getting started. Hopefully, I don't know how long this is going, but hopefully less than 15, 20 minutes. So I think what we can just wrap up with, guys, is saying, if you want to follow along with this series, and we're going to be super transparent with everything, with the updates, and keep you guys informed with what we're doing, hit that subscribe button, hit the notification bell, because again, we'll post these. We post a ton of other videos, but that's the best way to keep up to date with us. If you guys enjoyed this series, let us know by giving a thumbs up. I mean, I know you guys already did from the last video, but that's share your thoughts down below. Absolutely. And again, if you did want to follow along with our trades live, so for example, when we placed these this morning, all of the private membership group members got to know these two portfolios along with our personal portfolio as well. So there's a ton of great stock ideas if you are looking for those. That's that first link down below. But stay tuned, I'd say, for next week, Dad, because we are going to be focusing on adding in a fixed income fund. That's going to be one of our main priorities for the next update.
2 weeks from now.
2 weeks, I should say. Sorry, 2 weeks. 2 weeks from now, maybe we do. But yeah, we'll see when we update. I could see doing more frequent ones if it calls for it.
That's a good point.
Yeah, but
and if you don't mind me adding, Brandon, very quickly to the viewers, we mentioned we'd like to keep these a little bit shorter, and I know there's a divergence of opinions out there. We could spend an hour talking about this phase right here. Maybe provide us a guideline, and we'll try and meet in the middle somewhere as to, is longer with more detail better, or keep them nice and tight, and then whatever works best for you guys.
I love that, actually. Leave your comments down below and feedback on that, because yeah, we could have easily spent an hour on this initial one and talked about way more deep into the strategy and why we're doing things. But some people complain and some people like the shorter ones. So if you guys prefer the longer ones, I actually don't mind the longer ones whatsoever. I could sit here.
It would be way easier for us to go deeper into the thought process if that works for you guys.
So yeah, leave your comments down below. But at least for this one, let's wrap up our first official episode. This is technically episode 2, but this is our first, pilot episode of getting the portfolio off the ground. And hey, we're getting there. We still got a lot of cash to deploy. I kind of like the fact that the markets are getting pretty rocky and volatile right now, because we may have some nice opportunities coming our way. But I think then, Dad, this is it for our first little episode.
Let's wrap this up. It's been a blast kicking things off, and we'll be back soon with more.
We'll be back soon with more. So stay tuned, guys. Hit that subscribe button, hit that like button if you enjoyed. And as always, we'll see you in the next video.